Welcome to Earnings Recap. Today we're summarizing SOFI Technologies' Q1 2025 earnings conference call.
That's right. We're going to break down the key takeaways from the call.
Yep, in plain English, we'll focus on what's important for you to understand about how the company did and where they're heading.
And our insights are coming straight from the top CEO, Anthony Noto, and CFO, Chris Lapointe. Plus, we'll dig into that analyst Q&A session.
Exactly. So we'll cover the big financial numbers, management's take on performance and strategy, and some of those interesting questions analysts threw at them.
It was definitely a packed call. So if I had a lot to report, let's just dive right into the financial highlights, yeah.
Okay, sounds good. Growth seemed like the headline right off the bat.
Oh, absolutely. They added, 800,000 new members?
Yeah, 800,000 in Q1. That's up 34% from last year, puts them at nearly 11 million members total. 10.9 million.
And it wasn't just members joining, they were adopting products like crazy too.
Right, 1.2 million new products added, up 35% year over year. So now they're sitting on over 15.9 million total products. That's some serious expansion.
It really is. And, that growth, it directly fed into their revenue numbers.
Which were also records, right?
Yep. Record adjusted net revenue, $771 million. That's a 33% jump compared to last year.
And wasn't that their best growth rate in a while?
Exactly. Highest in 5 quarters, actually. Shows some real momentum building up.
So where did that revenue actually come from? Was it spread out?
Well, it was interesting. The financial services and technology platform segments, they brought in $407 million together. That's a huge 66% year-over-year increase.
Wow, 66%. Okay, and lending?
Lending was strong, too. $412 million in adjusted net revenue. That's up a solid 27% from last year. Good originations there.
Okay, so strong growth across the board, basically.
Pretty much.
Yeah.
And another record they hit was on fee-based revenue.
Right. The stuff that isn't lending directly.
Exactly. $315 million there. Up 67% year over year.
67%. That's massive. What drove that?
A lot of it was that loan platform business, the LPB. Plus, origination fees, referrals, interchange from debit cards, brokerage fees. It all adds up.
So they're really pushing towards those capital-light revenue streams?
Definitely. If you look at the annualized run rate, it's getting close to $1.3 billion just from fees. It's a big strategic shift.
Okay, record revenue, record fees. How about profitability? Did that follow?
It did. Another record on adjusted EBITDA, $210 million. That's up 46% year over year.
And the margin?
Healthy, 27% margin. And their incremental margin was even better, 35%. So a good chunk of that new revenue is dropping to the bottom line.
Nice. And actual net income?
Yep, $71 million. Gives them a 9% margin and earnings per share of 6 cents.
Okay. And the overall financial health, tangible book value?
Also looking stronger. Ended the quarter at $5.1 billion. That's almost $1 billion higher, $946 million to be precise than this time last year.
So, summarizing the financials. Strong growth everywhere. Members, products, revenue, fees, and profits are following suit, plus a healthier balance sheet.
That's a pretty good summary, yeah.
Yeah.
Big quarter numbers-wise.
So after laying out those strong numbers, management, specifically CEO Anthony Noto, kind of explained the why behind it all, right? Their strategy.
He did. He kept coming back to this idea they call the Financial Services Productivity Loop, FSPL.
FSPL. Okay, what is that exactly? It sounds kind of jargony.
It does a bit, but the concept is pretty simple. Think of it like their engine. They invest in the brand, they innovate on products that attracts people.
Okay, get members in the door.
Right. And then because they offer so much, those members start using more SOFI products over time, cross-selling.
So getting someone with a checking account to also take out a loan or start investing.
Exactly. And Noto highlighted a key stat. 32% of all the new products they added in Q1 were taken by existing members.
32%. So nearly a third of the product growth came from people already using SOFI. That loop seems to be working then.
It really demonstrates that cross-selling muscle they've built. They seem to understand what their members need next. Makes the customers stickier,
Yeah, definitely harder to leave if you've got multiple things tied up in one place. And getting them in the door starts with the brand you mentioned.
Yep. Noto talked quite a bit about their brand investments. Things like that TGL Golf League they sponsor apparently reached over 20 million viewers.
Oh, wow. And obviously SoFi Stadium gives them visibility.
Right. Plus the NBA partnership. They're sports ambassadors. And now they're even moving into music, partnering with CMA Fest.
CMA Fest. Interesting. Trying to reach a different crowd, maybe?
Seems like it. Broadening the appeal. And it's not just about seeing the name. They're tying engagement to it, too.
Like the SOFI Invest promotion with the TGL playoffs.
Exactly. And offering special perks for their SoFi Plus members at CMA Fest, trying to build that connection.
Makes sense. Okay, so that's the overall loop in brand building. What about the specific business segments? Financial services seems like a standout.
Huge growth there. Noto said revenue doubled year over year, crossing $300 million. And SoFi Money is a big part of that.
The checking and savings part.
Yeah. They've put a ton of work into the banking side, operations, regulation, being a proper national bank.
And it's paying off.
Looks like it. Annualized debit card spending is over $14 billion now, and deposits hit $27.3 billion.
$27 billion in deposits. That must save them a fortune in funding costs compared to borrowing elsewhere.
They estimate about $515 million a year in savings. It's significant.
Wow. And the product itself has grown too.
Definitely. Tripled the number of money products since 2021. They've got the high APY, P2P payments, bill pay. They even added self-service wires recently.
So they're clearly betting big on SoFi Money. Noto thinks it can be a billion-dollar business.
That's the goal they stated, yeah. And within financial services, there's also that loan platform business, the LPB.
Right, the fee generator we talked about. How's that specifically doing?
Exploding, basically. In less than a year, it's hit an annualized run rate of over $6 billion in originations.
$6 billion. And generating fees without SoFi taking the credit risk, right?
Exactly. Over $380 million annualized fee revenue from that already. It's all about connecting borrowers with other capital providers.
And they're landing big partners for that. Blue Owl, Fortress.
Yeah, he mentioned those deals specifically. Billions in new capacity. And they see potential to expand it further, maybe into near-prime loans, other types.
So LPB could also be a billion-dollar business eventually.
That seems to be the aspiration, yes.
Yeah.
2 potential billion-dollar pillars within financial services alone.
Okay. What about SoFi Invest?
Getting more focused, too. Product growth is accelerating up 21% year over year, reaching 2.7 million products. And member engagement hit record levels in Q1.
What are they doing there? Improving the app? Adding stuff?
Both. They mentioned making 401k rollovers easier, improving how stock info is presented, and they're expanding what you can invest in.
Like pool.
Well, they partnered with Templum to offer access to private company shares, like Anthropic. That's pretty unique for a platform like theirs.
Yeah, usually that's reserved for accredited investors or institutions.
Right. So they're broadening access. Noto listed off everything. Stocks, robo-advisor, their own ETFs, IPO access options, alternatives.
And more coming.
Crypto? Yep. Plans for level 1 options and eventually crypto and blockchain stuff. They seem to have long-term ambitions for integrating that across SoFi.
Interesting. Okay, then there's the technology platform segment. The behind-the-scenes stuff.
Yeah, providing the tech for other companies. He highlighted a cool rewards debit program they built for Wyndham Hotels.
Ah, using SoFi's tech to power someone else's financial product?
Exactly. And a deal with Mercantil Banco in Panama using their cyberbank platform.
So landing international clients too. How's the growth there? I thought I saw accounts dipped slightly.
They did, yeah. One big client diversified its providers, but revenue still grew because they're monetizing better and adding new, smaller clients.
Okay. And the outlook?
They expect things to pick up, maybe impacting revenue more in 2026.
Yeah.
They think more traditional companies will need to upgrade their tech, driving demand.
Gotcha. So maybe a longer sales cycle, but potentially big payoff later. And finally, the lending segment itself. Any innovations there?
Absolutely. Home loans saw a boost, partly from acquiring Wyndham Mortgage. Originations up 54%.
And they launched home equity loans too.
Yeah, successfully launched them, already made up over 1/3 of their home loan volume in Q1.
Yeah.
They think demand will really take off if rates drop.
Makes sense. What about personal loans?
They've got a new product targeting people with high credit card balances, the revolvers.
The ones just making minimum payments.
Exactly. So SoFi is offering them a lower rate personal loan to consolidate that debt. They claim it could cut monthly payments by up to 40%.
That sounds genuinely helpful for consumers and probably still good returns for SoFi.
That seems to be the idea. And on student loan refi, they launched something called Smart Start.
Smart Start.
Lower initial payments right after graduation. Helps members get on their feet, build savings, fits their whole help members get ahead mantra.
Okay, so innovation across all lending types. Noto also talked about SoFi Relay and SoFi Plus, right? The membership aspect.
He did. Relay is their tool for tracking all your accounts, SoFi or not. Huge user base there, 5.1 million people.
And that's like a gateway drug for other SoFi products?
Kind of, yeah. A starting point for cross-selling. And then SOFI Plus is the premium tier.
With the perks and benefits, they added a paid option for that now.
Yeah, you don't just have to have direct deposit anymore. You can pay a subscription fee. And plus, members, whether new or old, are apparently adopting other products at really high rates.
So that whole ecosystem strategy seems to be knitting together. Attract, engage, cross-sell through things like Relay and Plus.
Exactly. And Noto was pretty clear. They're hitting the accelerator on innovation.
Meaning faster product launches, more improvements.
That's the message.
Yeah.
He thinks the market opportunity is massive, and SOFI is in a unique position to capture it because of how they've combined all these businesses.
The one-stop shop advantage.
Basically. He argued it gives them better economics, lower costs to acquire customers, and ultimately higher lifetime value per member than competitors who only do one thing.
And he listed specific examples of that value.
Yeah, loads of them. Broad loan selection, good deposit rates, the plus benefits, investment options, retirement matches, rewards, free financial planning, travel discounts.
Okay, a comprehensive list.
And even upcoming AI tools, SOFI Expenser and SOFI Cash Coach, all reinforcing that core idea. Help members spend less than they make and invest the rest.
So summing up management's view, growth is strong, the strategy that FSPL Loop is working, and they're doubling down on innovation because they think they have a winning formula.
Yeah, that captures it pretty well. It's a confident presentation.
Okay, so after the prepared remarks, things usually get interesting with the analyst Q&A. What were some of the key points that came up there?
Yeah, some good questions.
Yeah.
One of the first was about SOFI becoming mainly a fee-based business, given how fast that LPB is growing.
Right, could they just ditch holding loans altogether eventually?
Noto basically said, well, fee income is already 41% of revenue, and yeah, we expect it to go over 50%.
Driven by LPB and other stuff like interchange.
Exactly. He mentioned LPB, interchange, referrals, insurance, even small business offerings contributing. And he specifically talked about the potential to grow LPB even more by serving borrowers. SOFI normally wouldn't lend to themselves outside their prime credit box. Mention that edge-focused deal again.
But they're not abandoning balance sheet lending?
No, he was clear on that. They needed to hit their target return on equity, which is 20-30%. So it's about balance.
Okay. Optimize both fee income and lending returns. Makes sense. What else? Did anyone ask about the tech platform and maybe clients getting hesitant because of the economy?
Someone did, yeah.
Right.
Worries about market volatility slowing down deals for the tech platform.
And the response?
Noto stuck to his guns. Said the long-term outlook and guidance haven't changed. He actually thinks the opposite might happen.
Like uncertainty pushes companies to innovate more.
Kind of. He suggested banks and other brands will feel more pressure to upgrade their digital offerings to compete, potentially accelerating demand for SOFI's platform in, say, 2026.
Interesting take. Counterintuitive almost.
He also mentioned getting more inbound calls about potential acquisitions and partnerships in fintech generally, so activity is still happening underneath the surface.
Okay. What about the capital markets? That LPB model relies on investors buying the loans SOFI originates for them. Is that market holding up?
Crystal Point, this CFO, took that one. Yeah. He said the markets are robust. They sold or transferred over $3 billion in loans just in Q1.
$3 billion is a lot.
Yeah, and they locked in over $8 billion in new LPB partnerships. So plenty of capacity and demand, according to him. Execution on sales is strong.
And he brought up that declined applicant pool again.
He did. That massive $100 billion pool of applicants SOFI turns down each year. The LBB allows them to tap into that, generate high-margin fees with no capital tied up, and minimal credit risk for SOFI itself. It's a huge opportunity.
Definitely sounds like low-hanging fruit if they can execute it through partners.
Okay, shift gears slightly, student loans. There was a question about potential government changes, right? Like caps on grad PL US loans.
Yes. An analyst asked how SOFI is positioned if those federal programs get limited.
And SOFI is ready to step in.
That was Noto's message. He said their existing in-school loan product is ready to capture that volume. He mentioned it has attractive economics, often involves co-borrowers, which adds stability.
And crucially, it gets those borrowers into the SOFI ecosystem early.
Exactly. High likelihood they'll refinance with SOFI down the road. It's a long-term play, building that relationship from the start.
Okay. Another LPB question. The take rate, essentially SOFI's cut, seemed to go up.
Yeah, someone noticed that. LaPointe explained it's partly due to strong investor demand, creating pricing tension. Basically, SOFI could charge partners a bit more.
But it might fluctuate.
Right. He cautioned that as they expand LPB into that $100 billion decline pool, deal structures might vary, so the take rate could move around. But the core economics remain very healthy. Gotcha. Makes sense. Then, deposit costs. with expectations of Fed rate cuts maybe easing off, what does that mean for SoFi paying high APYs?
Noto tackled this. He really emphasized their advantage being a bank with a lending business.
How does that help?
It means they can afford to offer competitive APYs to attract deposits, unlike, say, fintechs relying on partner banks who might cap rates.
So they can keep rates high if needed to win primary customers and cross-sell.
That's the idea. He expects overall industry APYs might drift down, but SoFi will stay near the top. Lapointe added they're on track with funding loans mostly via deposits and aim for deposit growth to match loan growth.
So their structure gives them flexibility on deposit pricing. Final couple of points. Underwriting. Are they getting nervous about the economy and tightening standards?
Noto said they have early warning dashboards tracking economic signs. If things flash red, they can tighten their credit box, cut back on riskier tiers.
They haven't yet.
Not yet. He said indicators are volatile, but haven't triggered changes. He pointed to their current strong credit performance, delinquencies, and charge-offs improving. Plus, their typical borrower has a high income and FICO score, making them more resilient.
So watching closely, but confident for now and ready to adapt if needed.
Seems so. And the last interesting bit was about student loans again. Can the in-school loans and refi loans coexist happily? Doesn't one cannibalize the other?
Yeah, if you give someone an in-school loan, aren't you hoping they don't prepay it by refinancing too soon?
Noto said prepayments are already factored into how they value the loans.
Yeah.
And the bigger picture is building that long-term relationship. They want to help people reduce debt, even if it means refinancing a SoFi loan later when their credit improves.
So it's about the member's journey, not just maximizing profit on one specific loan.
That was the message. Members' financial well-being first.
Okay, that covers a lot of ground from the Q&A. Really adds color to the main presentation.
Definitely. You get a better sense of the nuances and the potential challenges they're thinking about.
So let's try and wrap this deep dive into SoFi's Q1 2025 call-up. The big picture seems to be strong growth, clear profitability improvements, and a whole lot of innovation.
Yeah, all driven by that unique strategy of being this, financial one-stop shop.
Yeah.
It seems to be delivering results.
And management sounds pretty bullish about the future, ready to step on the gas with investments.
That's right. They see a huge market out there and believe they're in a prime position to capture more of it.
Okay, so here's something to chew on as we finish. How might SoFi's whole integrated approach, combining lending, banking, investing, tech, and their intense focus on member lifetime value, how might that actually reshape the financial industry competition?
Yeah. What are the long-term ripple effects for traditional banks, for other, maybe more specialized fintechs? Can they keep up if SoFi's model proves superior?
Something to think about. Thanks for joining us for this deep dive.